Good morning, Size Traders. This is Amos here with Gary, head trader at SizeTrade. Gary, thanks for being with us.
Hey, Amos, what's going on?
Good. Gary, let's continue talking about technicals today. We had a potential bull flag last week and we eventually broke out of it on Wednesday. And then we had the first retest on earlier this week on Monday, and we closed above the bull flag on the same day. So let's get into a little bit how you're trading the retest of this bull flag.
Yeah, sure. So, like you said, we have a potential bull flag. I'm not in love with it. I think it's a good bull flag, but it's not like a perfect bull flag. We had the breakout.
What do
I
you see?
didn't.
What do you see about it that's not perfect? What would you like to see?
I just think it took a little bit too long, and we stayed away from the top and the bottom. We stayed kind of in the middle of the range of the bull flag. So all those 2 3 weeks when we kept staying in the 2260s, we had a couple of tails that would touch the bottom or the top of the bull flag and reverse. But in general, the meat of the trading was kind of in the center of the bull flag. And in the past, I've seen that as a potential for the bull flag not to work out. I prefer to have 5 touches, so I prefer to have it go from the bottom to the top to the bottom to the top, and do 5 actual touches between the bottom line and the top line, and then eventually break out. That would be like a textbook, what I would call a textbook bullet flag for me. Also, I didn't like the fact that we gapped out of the bull flag and it took a couple of days to retest, but we did retest. We did have a successful retest on Monday. So I guess the question is, how am I trading it? I'm actually trading this one with options. I'm not actually long ES right now, but I did buy a bunch of calls. When we gapped out of the bull flag, I bought some weekly puts. That was last week and this week for this week. I took a loss on the ones from last week because the market didn't retest. But on the ones that I bought for this week, I bought a bunch of out of the money puts. I did all right on them. I didn't do spectacular, but that was more of I do that as more of a hedge. So if I do want to go long, I feel comfortable knowing that I have protection to the downside. Now, yes, sorry, on Monday we did retest it. Actually, we did a podcast before the open, and I didn't know it was going to retest, but it ended up retesting and then closing back above the breakout point that was necessary for the bull flag. So on that day, I started buying a bunch of out of the money calls, relatively cheap out of the money calls. And I bought some that are expiring today at the close, and I've also bought some that are expiring at the end of the Friday. And I might roll some if I take a loss on the ones from today, I might roll those into next Wednesday as well.
Gary, for some of the guys who aren't familiar with options, can you explain just as far as a risk reward ratio what that looks like for the options?
Yeah. So what I like to do is I like to buy the 10 centers up to $1 options. So 10 cents on the S. So for every one contract, that'd be I guess 50. No, I apologize. A $5 loss, all the way up to $1, which would be a $50 loss. So I take a risk premium of anywhere between $5 to $50 per contract.
Hmm.
I like to really size into them. So I buy a spectrum anywhere between there. Sometimes I go up to $1.50, which I did actually this week. So currently the ones that are expiring today, I have a bunch of 2285 calls that I was able to buy yesterday because I didn't actually buy any on the retest on Monday, but yesterday when we were trading down near the Monday lows, I looked to buy the 2285. I got some 2280s, and I got very few 2275. Just I was bidding for them, but it was a little expensive. The majority of my 2275s I did all right on, but again, I got very little volume done there, so I sold those for nice profit. The 2280s I've sold, I would say half, and the 2285s I'm actually still accumulating here that are expiring today. I'm buying them. I think I bought a couple. The majority of them I bought in the 20 to 30 cent range, and I bought a little bit more in the 40 to 50 cent range as I took off the 2275s. I flipped that money into the 2285s. And then just recently here pre-open, I bought a couple for $1.15, I believe, or so. Just nothing huge, but now I have a really big concentrated position in the 2285 is expiring today, And then going out to Friday, I have some 2290s, 2295s, and 2300s that I bought. I'm not purchasing any more of those today. The majority of the buying I did was yesterday. So that's how I feel comfortable trading this. That's how I'm personally trading this bull flag breakout. Is that if we're going to have a extension to the upside, I'm not taking a lot of risk. I know my risk. My risk is the premium that I paid for the calls. And if we do have an extension to the upside, I'm looking for the gap close. So we gapped between Friday and Monday down on the SPY or the S&P/X. So I'm looking for us to close that gap. Once we close that gap, I might actually start selling some of my calls and shifting into ES.
So what are you looking for the as far as the futures, as far as the ESH?
So again, we are in a bull flag. It's not a textbook bull flag. We did retest and confirm. So I do think that potentially we go higher here. I'm not like 100% sure about it. That's why I'm playing it with the options to minimize my downside. But and you still have to play the pattern, even if your gut sometimes tells you maybe it's not the best pattern. So I'm playing the pattern to the long side. I don't have any puts, even though I would take a look at some puts just to buy some protection. But I haven't yet. I haven't yet done that yet. I'm hoping for a great move up to 2290. We have the Fed meeting today as well, so I'm hoping that will be a positive catalyst as well to the market. It's February 1st, so you got a lot of IRA money coming in and so on. I'm really hoping we could get a move to at least the closed of Friday, which on the SPY was around 229, and right now we're at around 227.5, so $1.50, so it's 15 points. So potentially I'm looking for us to go into the low 2290s, which would be a nice payday because that I would be 7 points in the money, and if we could do that relatively quickly in the day, I'll get a couple of points for the premium. So I could flip those the options that I have an average price of, I would say, around 70 cents on for at least $7, making 10 to 1 on my options, which is 1,000%. So that'd be a good payday to start the month, and it also allows me to minimize what I'm willing to risk to the downside instead of just buying ES. And then when we get up there, depending on the breadth, depending on a lot of these other things, I'm going to decide if I want to flip into the ES contract directly, or do I want to continue to buy these cheap calls to the upside. On another podcast, I could talk about why I like calls more than puts. Not because I necessarily think the market always goes up or doesn't go down, but just there is a intrinsic value why I like. There's a discount. What I believe they're not perfectly priced to the upside. So if you always look for out of the money calls and puts, the puts are always a lot more expensive than the calls, and I think there's a good reason for that. And on another podcast, I could take an example, a real-time example, and show you why I like the calls and show you the difference of what I believe is not the right fair value.
Gary, that sounds awesome. Thanks so much. Thank you for being with us today.
Thanks a lot, Amos.
Yeah,
Have
stay
a great
tuned.
day.
All size traders, subscribe as usual, and we'll keep you posted. Until next time, Gary, thanks so much.
Thanks.